I'm Evelyn Freitas with Guaranteed Rate Mortgage. Please enjoy this presentation on refinances.
Good morning, everybody. I want to let you know that this presentation is going to be broadcast on Facebook Live later today. So if we are friends and you are so inclined, I would love it if you would share this presentation with your friends because there may be some information in it that will help them. So I am a residential mortgage broker, so I help people obtain mortgages. I like to say that I help them get the rest of the money because oftentimes people do not have all of the cash that's necessary to purchase a home, so that in order for them to become a homeowner, it is necessary for them to take out a mortgage. So that's what I help people do. But what does that mean? What kind of mortgages do I do? Where do I do them? What are they for? So I do mortgages that are backed by many different entities. I do conventional mortgages, which are backed by Fannie Mae and Freddie Mac. I also originate government loans, which can be FHA loans or VA loans for veterans who have served our country, or even loans through the U.S. Department of Agriculture for certain properties that are in designated rural areas. I do jumbo loans that are backed by private investors, and then I also do loans for various other special purposes, like loans to renovate a home, loans for down payment assistance to help people get the rest of the money sometimes. So those are special loans that I also help with. And what kind of properties do I do these mortgages on and where are they located? So I am licensed to originate residential mortgages, which means mortgages on residential 1 to 4 unit properties. I'm licensed in California and Washington, so if you know anybody with properties in either of those states, I would be able to help them with their mortgage. And then what is a mortgage for? A mortgage can be used either to purchase a property, which is for most people who are buying a property, they do not have all of the funds for that property, so they take a mortgage. And a mortgage can also be used to refinance that existing mortgage by the existing homeowner. So today I am going to focus on refinances, what they are, how they work, and questions that most people ask themselves. And if the answer is yes, it probably means that now is a good time for them to refinance. Basically speaking, a refinance is a mortgage that pays off the existing mortgage on that home and takes its place. It pays it off, it closes it out, that old mortgage no longer exists, and the borrower makes payments on the new mortgage for the life of that loan. Why would somebody want to do that though? They already have their mortgage in place. Maybe they've been making payments on it for a while. What would be the reason that somebody would want to get a new mortgage to pay off the old one? So there are several different reasons that people would do this, and there are some questions that people ask themselves to see if this would be a good time. Please ask yourself if you know anybody in these situations and consider referring them to me for a checkup on their mortgage. Question number 1, do they currently have an interest rate that is higher than current market rates? As I told you before, rates are at the lows of about the last year and a half, and they are actually dropping today as I'm talking. So somebody who took out a mortgage in a previous time when rates were higher, maybe in 2016 or early 2017, they have an opportunity right now to get rid of that higher interest rate mortgage and replace it with a lower rate mortgage. And if the rate's lower, the payment's going to be lower, okay? They're going to be spending less money on interest, and that means more of their money that they've earned is available for them to do something else with. Okay, so I worked with a client last year who purchased a home in 2004 with 100% financing. They had a first mortgage that was at 5.75% and a second mortgage at 6.75%. So overall, they were paying about 6.25% on their mortgage debt. About a year ago, we lowered their interest rate with a refinance to 4.875%. That saved them over $1,000 a month on their mortgage payment. Okay, that's $12,000 a year. Now, I called them the other day, and we can actually reduce their rate further from 4.875 to 4.25, which will save them another $200 a month. So, do you think that they can figure out what to do in their household with another $1,200 or so a month? Probably. Okay, question number 1. Do they have a higher interest rate than market? Question number 2. Did they purchase their home with less than 20% down? Okay, if somebody buys a home with a down payment that's less than 20%, they have been paying some form of mortgage insurance. And odds are, if they've owned their home for at least a couple of years, they have grown equity in their home, and they may have enough equity to get rid of that mortgage insurance. Depending on the kind of loan they have, it may require a refinance to retire that mortgage insurance. I do free mortgage checkups. So if you know anybody in this situation, please refer them to me. We can see if it's time to get rid of that mortgage insurance, probably save them $200 to $400 a month. So question number 2, did they buy with a low down payment? Question number 3, do they have high interest debt in addition to their mortgage? Okay, credit cards, student loan debts, home equity lines of credit, all of these have higher interest rates than the prevailing rates on fixed rate mortgages. So I worked with someone last year who refinanced her mortgage. She got a lower interest rate. She consolidated several $1,000s of student loan debt in with her mortgage, and overall, the overall payment dropped by over $1,000 a month. So again, it's not necessary to spend so much of a person's income on interest. Sometimes a refinance can really reduce that interest burden. Question number 4, do they want to tap into their home equity for a home improvement program? How about a refinance to raise funds for a remodeling project? Maybe they have a yard that's very blah and they want to make it look very and nice. Or maybe they need to add an addition to their home for their growing family. So people can get a refinance and take cash out. They're actually tapping into their equity, and they get a refinance that pays off their old mortgage. The additional amount of the refinance goes to them, and they can use it to pay designers and contractors and the people who help them upgrade their home. So tapping into home equity for home improvement is also another great reason for a refinance. Okay, last, do they have a past credit issue like a bankruptcy or a foreclosure? People who experience these events are only eligible for certain types of loans for a waiting period after that event concludes. So for instance, somebody who had a Chapter 7 bankruptcy can get an FHA loan 2 years after that is discharged, but they have to wait 4 years to get a conventional loan and 7 years to get a jumbo loan. So if you know someone who has experienced one of these events, it may be that the waiting period is over and now they are eligible for a better loan, which will again save them money, which they can use to do other things in their life that are more important, like investing for the future, saving money for kids to go to college, things like that. So these are some of the most frequent questions people ask to determine whether now is a good time to refinance. I do offer free mortgage checkups. So if you know anyone in any of these situations, please refer them to me for a 30-minute call. We'll go over their mortgage and see what they might be able to benefit from. I would love to help you and your referrals obtain the mortgage that suits those people best. I appreciate your referrals tremendously, and I know that the people that you refer to me appreciate your referrals tremendously as well. Thank you very much.